So today, I think he's picked out two stocks for us. Varindar, what do you have?
Well, the first one is clearly Pidilite. The reason why I picked up these two companies is because we have seen, growth in terms of total income as well in both the companies. Look at the numbers. It's not a small company by any chance. Total income was up 11%. EBITDA was up 53% for the company. And look at EBITDA margins. They came at 22.1% compared to 16.1%. And profit for the company was up 50%, clearly beat on all remarks. The consumer and bazaar segment sales was up 14%. EBIT was up 50%. And EBIT margins for that segment was up from 19% to 25.2%. I think Motilal has a report on that company and they have a price target of 660 rupees per share. The second company is clearly Balaji Amines. Look at the numbers. Total income up 6%, EBITDA up 44%, and EBITDA margins came at 20.7% compared to 15.3%. And profit for this company was up 115%. Clearly the Amines segment where the sales was up 5%, EBIT was up 52%, margins increased from 12.6% to 18.3%. And also the hotel segment turned profitable from a loss.
Okay, Varindar, thanks so much for that. In just a bit, we'll try connecting with the management of Balaji Amines as well. This is a stock which has also given shareholders fairly good returns. It's rallied nearly 80% in the last 1 year. In fact, in Friday's trade also, that stock was up nearly 8%. D. Ram Reddy of Balaji Amines now joins us on the phone line from Solapur. Good morning and congratulations on a strong quarter. First on the margin front, very strong improvement. EBITDA margins at over 20%. Do you believe it's sustainable at 20%, or is there scope to improve your margins?
Yeah, very good morning. There's a lot of improvement. In fact, we are very happy that we have done well in this challenging environment for the chemical industry. And we have done almost 30% growth in the volumes. Actually, if you see, because of the price declining in the oil prices, the revenue, you will see only 2 to 3% growth. But actual volumes have gone up, and we hope that this will continue for the next quarter also.
Okay, that's a very healthy, 30% volume growth. In fact, I was going to come to the revenues as well. For 9 months, you've done just a 2% growth in revenues, which has come in at about 470 crores. Yeah. What's the expectation for the full year, both in terms of volumes and revenues? And if you can give us an indication of what the growth would be in FY17 as well?
There will be another 150 to 160 crores adding for the next quarter for this total turnover. And there will be 30 to 35% growth will be there for the year 2017 also, if we see. And the bottom line will improve if we go in the same path, utilizing of the capacities. Like this year, we have utilized the methylamines and the specialty chemicals capacities almost 30-35% growth we have seen. It goes continuously for the next year also. There is a definitely much better results you will see for the 17.
You said that 30 to 35% growth in FY17, that will be for volumes, right? Not revenues.
Yeah, volume, it goes to revenues also. Revenues fall depends upon the raw material prices and then on end product prices. This time what has happened, the oil prices have gone down, whereby the raw material price also have gone down and finished products price also has gone down. If the same price would have been there for the last year, it would have been almost 800 crores this year.
Mr. Reddy, any indications of what your margins will be in Q4 as well as in FY17?
It will be same or maybe better than this. And in fact, there is one new product coming in, acetonitrile, which the commissioning is completed, which is coming in line by February end. And that is about 10,000 tons capacity, which may add another, if everything goes well, about 50 to 60 crores addition to the existing capacities, the revenue.
Oh, that's good to hear. All right, yeah. Mr. Reddy, we leave it at that. Thanks so much for joining us. So that's a company, Balaji Amines, very confident of growth going forward. And that is one of our earnings pataka. But let's get Mr. Tulsian into